Powell's favorite inflation measure could be the key to lower interest rates. I know for a ton of different reasons, consumers looking for interest rates to be lowered so that they get cheaper mortgages, cheaper car payments, and everything else. And the second level of that, the stock market has tended to do better with lower interest rates. And every time there's any reflection of the Fed might not have to hike interest rates so much, or they might cut interest rates sooner than you think, stock market has been rallying. And so we are going to dissect here what is Fed Chair Powell's favorite inflation metric in just a second, because we have another PCE inflation measure reading coming up here this week, and we're looking for 2%. And that was explicitly stated at Jackson Hole recently, where all the global central bankers met. Fed Chair Powell said, once again, one, that the PCE measure is his favorite measure to look at. That's what they're eyeing. And 2% is and will remain to be the target. So as they've been looking for this 2%, what's been going on in interest rates? Well, interest rates have climbed fairly consistently as we look at the journey from the end of 2021 till present. We were at 0%. Now we're 5% plus in terms of Treasury interest rates, and the Fed's overnight rate is at 5.5%. And this has all been in an effort to fight this inflation that has been rising since the end of 2021, the start of 2022, fairly consistently with interest rates rising. And so we look at this inflation measure to be a pretty direct potential indicator of either higher or lower interest rates in the future. Now, this is that key metric, that core PCE inflation measure that Fed Chair Powell is so fond of, and it's still pretty far away from 2%. This is PCE inflation over the course of the last 5 years. Are we off the highs? Yes, that's nice to see. We're headed in the right direction. Great. But now the question becomes, how long will this journey be from where we sit right now, around 4%, to 2%? And what's really nice is we go back here to 2018, and you can see, you can remember a time between 2018, 19, 2020, and even into the start of 2021, inflation wasn't a story. You weren't hearing about it. You were hearing about the pandemic. You were hearing about the Trump presidency, all these different things. No one cared about inflation because we were at 2%. And so the Fed doesn't have to hike interest rates or do anything, and you don't have to worry about it because that's where inflation is supposed to be in the eyes of the Fed. Since that start of 2021, like we just looked at, really climbing almost step for step with interest rates. Inflation's been a problem and interest rates have been rising. So there's your correlation. Now, where are we at today? Well, the last PCE number actually came in way under expectations. You look at the last year's worth of data, and you can see that one, we're headed in the right direction, but the last step here was significantly lower than the one previous, going from the mid-4s all the way down to 4.1%. And the expectation for this month is 4.2%, so right in there. But again, the question becomes, how long is it going to take to get to 2%? At this pace, if we're dropping from 4.6 to 4.1, and the next, at that rate, and this is, kind of a joke, an example, but at that rate, then the next level would be in the mid-3s, then inflation won't be a problem by 2024. Fed Chair Powell doesn't think that we're at that pace. And of course, to expect over the course of the last year from inflation's peak at around 5.2% here, looking at the core PCE value, dropping about 1/10 to 2 or 3 tenths every month, that's a more realistic pace, and obviously the market is priced in that we're going to stay right around the last reading here. So no one really thinking that we'll get that big of a drop. But what was really interesting is the number that came in earlier this week that we're going to speak to even further in just a second around job data. Came in way lower than expected and kind of tipped its hand to the potential for a lower inflation reading and a lower non-farm that we have on Friday coming up. And you saw a real significant knee-jerk reaction of stocks rising off of this number. I mean, look at that big bounce back that we've seen in the last couple of days of trading. Interest rates didn't fall that much, but did fall from their highs and finally came off of this recent trend over the course of the last 5 or 6 weeks. It's just been higher interest rates, higher interest rates, higher interest rates, finally turned around a little bit here. And this just shows you if, a job data number that comes out lower than expected can move these markets this significantly, then this PCE number that, like I say, Fed Chair Powell has said numerous times is his go-to number. If that comes out and surprises lower, then you could really see stocks jump higher and interest rates move lower. On the flip side, the market is kind of priced in a little bit of this expectation here that now PCE might be lower than that 4.2 or 4.1%. So if it does come in at 4.1 or 4.2, or God forbid 4.3 or higher, this market might turn around in a big way as well, as they've priced in, like I say, a little bit of a lower expectation. Either way, you see the significance of this number coming out and how sensitive interest rate markets are, obviously directly. If it comes in way lower than expected, the Fed maybe doesn't have to hike interest rates that much. And then indirectly, that stock market is really jumping off of these inflation numbers. It'll be really interesting to see because, thankfully, knock on wood, we're not in a situation right now where there are a bunch of unknowns. Inflation is continuing to rip higher. And the question is, where will inflation stop, or where will interest rates stop? For the time being, at least, inflation has stopped and turned around, and interest rates are pretty much pricing in that we're not going to get higher than 6%. So the main question for that time being is how fast will inflation fall? And this core PCE number that comes out is really the key to that. If it is another significant drop to the 3.9, 3.8% area, then that would tell you that inflation is really moving lower at a faster pace than expected, and interest rates might move lower at a faster pace than expected as well, and stocks might have a reason to bounce back here a little bit. On the flip side, if that number isn't falling as fast as the market expects here, then you might see the inverse. You might see another reason for more interest rate hikes from the Fed and some potential bearishness for the stock market.